Good morning, everyone. Tuesday, January 19th. We had a long weekend, but we're back to work today. So let me show y'all what I'm rocking with. So open positions, couple different credit spreads, put credit spreads in Nvidia, put credit spread in Amazon, couple of put credit spreads in pins and iron Condor on Tesla, a put credit spread on Amazon, and then to hedge some of that crap, call credit spread on the NDX. So that's what I'm rocking with for open positions. For closed trades this year, there's the whole list, and closed about 14,000 so far. So for the open positions, we might as well start with Nvidia. Been sitting here with the put credit spreads inside this weekly squeeze for I think over a month at this point. So it's given me no reason to close the trade. It hasn't closed under the weekly 21. So nothing about the structure has changed, but for the love of God, this thing has been a total chop fest. So this morning, or this week rather, what I would love to see from Nvidia, not that the market cares about what I would love to see, but what I would love to see is for Nvidia to get back above its daily 21 EMA inside this daily squeeze. So the 21 is up there around 529. And you can see we're getting a little bit of some slop here this morning. So at the moment on Nvidia, if we take a trip on over here to the chain, let's see. So, we're only down about a third or so of the max loss, I believe. And we got January 29th expiration, put credit spread, 517.5 by 512.5. And then February 5th expiration, 510 by 505 and 500 by 490. So see if Nvidia can get its act together here this week and get back above the 21. That would be great. Amazon. So another one, guys, where this has just been such a total chop fest inside the daily, inside the 3-day, and inside the weekly squeeze. However, it really hasn't given me a reason to close the trade. Now, things were a little bit sketch last week. We barely closed under the weekly 21. So that's not going to shake me out of the put credit spread. But what made last week so, call it easy and effortless to hold through all that noise was a call credit spread that I took. So in the simpler options room, it's something that John does a lot, are those weekly call credit spreads on Amazon. So I took one of his suggested trades, and it made Amazon an easy hold last week. Made some really nice profits on the call credit spread, still holding the put credit spread. So taking a look at the daily, same thing. I would really love to see Amazon getting back above at least the 8 EMA, even better, the 21 EMA here this week inside the daily squeeze. So if we look at the pre-market, a little bit of a gap of the overall market. So we'll give Amazon a bit more time. The good news is, though, that we put some really nice profits in our pocket from the call credit spread. So shout out to John for that one. Something I'm looking to add to my game are those, shorter term weekly trades. And then on the put credit spread itself, we're sitting here at break even. So 30.50 by 30.40. The issue here, this is what I can't freaking stand about earnings, is that back in, November, December, earnings date was looking like it was February 11th. Now, earnings looks like it's going to be on the 28th, which puts me in a situation here where I'm holding a put credit spread on the options that expire the week of earnings. So, I could shoot myself in the foot here as these options continue to hold their value due to the increase in implied volatility all the way up into earnings. So if we can get a nice bounce for Amazon this week and we're looking at about 50% of the max profit, I'm going to go on ahead and snag that and take that money home. So we'll see. And then pins, good looking daily squeeze, right back down to the 21 EMA last week. No reason for me to close the put credit spreads. And this morning, we're making a nice little bounce, at least as of right now. So for pins, take you guys here. January 29th expiration, and I got 3 different sets of put credit spreads. Sold the 69 puts, sold the 66.5, sold the 66. So, good looking daily squeeze, and I'm pretty comfortable here, even holding through a move down towards, that recent support right above the 50 period simple moving average. So, giving pins plenty of time here, and, just about break even on that, though I don't think that's accurate. I think once we open up, we are in the hole a little bit. So that is pins. Let's keep moving here. AMD. So last week, nice retracement back to the 8 EMA. Took the position in a put credit spread, and then you get some news the next morning, and down she goes. So, one of those things, guys, where this is a good example. You got to be comfortable with your max potential loss. You're going to get every now and then something like this, where a good-looking setup, great-looking trend, news comes out, and down she goes. So we have the put credit spread that expires this week at 89.5. So sold the 89.5 puts. And then I think we bought the 88.5s as protection. So let's go take a look at the chain. So for all my open positions, this is the one coming against me the most at the moment. Yeah, we sold the 89.5 puts, bought the 88.5. So this expires this week. Same thing here. I would love to see a bounce back towards the 8 or the 21. That would make that a pretty easy hold, at least I think. So taking a look at the hourly chart, we are bouncing a bit here this morning. So let's see if we're going to open up around, say, 90. Kind of gets us right back above support. So if we do get any upside momentum here in AMD, I'm not going to be against the idea of taking this one off for break even. It's obviously not moving in the direction we were looking for. So if we can get out of here unscathed at break even, I think that's a good bet. So we'll see. Being patient with all these open positions, and then the hedge here on NDX. So the call credit spread that expires in a couple of weeks at 13,200. So as I'm sitting here, all these open long positions, I need me a little something just in case the market does end up pulling back a bit or continues to chop. So January 29th, NDX call credit spread, and I'm out here at 13,200 and then bought the 13,250 as protection. So a little bit of peace of mind having the call credit spread there. And I guess the good news is with all my open long positions, if the market does end up ripping here right off the 21, traveling up to new all-time highs over the next week or 2 weeks, all the gains potentially that we can make from the long positions will offset any losses from the call credit spread. So that is that. And then one more open position for you guys here, Tesla, Iron Condor. So I know a lot of folks are looking for Tesla to dump to 700, to rip to 1,000. With the short week here, Tuesday, Wednesday, Thursday, Friday is all we're working with. So of course, options are going to lose value a little bit quicker than usual. So what I did here on Tesla is call it an income trade, right? It's not a directional trade. It's just more so of a high probability bet. And we're doing the Iron Condor, selling puts down at 750. So sold the 750 puts, a good $100 out the money or so, and then bought the 740s as protection. And then on the call side here, sold the 950 calls, and then bought the 960s as protection. So pretty much here, guys, if we look at, say, a daily chart, I'm looking here come, Wednesday, Thursday, Friday for Tesla to pretty much be trading anywhere inside this range. Anywhere under 950, anywhere above 750, we're going to get a nice little paycheck from the Iron Condor. If there is a stock out there that could make a ridiculous move this week, I think we all know it could be Tesla. But looking here this morning, these waters are pretty calm. So I'll keep you guys posted on all those open positions. And really right now, that's kind of my major focus, is the management of open positions versus trying to get too crazy with a bunch of, new swing trades. Earnings is coming up, so that's something we got to kind of work our way through with a little bit of patience. But there are some good looking setups out there. I think you take a look at something like Peloton starting a brand new daily squeeze. So maybe a couple weeks down the road here, these Bollinger Bands have contracted. We got a nice tight daily squeeze. We're trading right above the 21, and you got some momentum hitting the histogram. That would be, I think, that would be some good money. So there's things like Peloton. There's beautiful setups like a Cisco. I think this is one of the best looking daily squeezes in the market, though you do have earnings coming up. That can be a bit of a pain. You've got PLTR, a great looking daily squeeze here in this brand new IPO that's already made one leg to the upside, added a nice IPO base, could be gearing up here in the daily squeeze for another. So there's no lack of good looking setups out there. I just think, guys, for me right now, focusing on the open positions before I get too aggressive taking new ones is what makes the most sense for my account. So I'll keep you guys posted, but big picture thinking, do we hold above the 21 this week? Do we bounce and rip towards new all-time highs off the 21 this week? Or do we jump or dump underneath it and start fading off a little bit more? Shall be interesting. Wish you guys the best of luck this week. I'll keep you all posted on all my open positions. If you haven't already, go ahead and subscribe, and I'll talk to you guys tomorrow morning. Peace out.